U.S. Treasury yields continued to surge after President Trump's sweeping duties, including a 104% tariff on Chinese goods, took effect Wednesday, and investors raced to pull money out of bonds. As the trade war between the U.S. and the rest of the world escalates, the market is trying to figure out what this means for the growth and inflation outlook both in the U.S. and globally. The allure of U.S. Treasuries as a safe haven asset appears tarnished right now, Susanna Streeter, head of money and markets at Hargreaves Lansdowne, wrote in a note. Volatility has hit the bond markets, as investors appear to be starting to pull money out to brace for what could be to come next, she said. In overnight trade, the 30-year Treasury yield briefly touched 5% before retreating. It was last trading at 4.835%, still up 12 basis points on the day and up about 45 basis points this week, according to TradeWeb data. Yields rise when bond prices fall. The 10-year Treasury yield was recently up 10.5 basis points at 4.366%, having hit 4.511% earlier and having risen above 4.5% for the first time since late February. The double-digit increase in long-end Treasury yields prompted a rise in European government bond yields, though the sell-off in Europe was less intense. Government bonds had been more in demand as investors sought safety, but the recent moves suggest that some positions are being exited to cover losses elsewhere in the markets and that liquidity is being squeezed, Streeter said. The sharp move upward in U.S. Treasuries comes even though bets that the Federal Reserve will cut interest rates have increased. This would usually put further downward pressure on yields, but this hasn't happened. The spike in long-end yields is causing a steepening of the yield curve, where the gap between short and long-dated bond yields widens. BNP Paribas Markets 360's analysts favor a position betting on a steeper curve between 2 to 10-year bonds in a highly uncertain environment. Yields on UK gilts have also risen, but less sharply, and are below the levels seen in January. Worries about stagflation are also rising, with a raft of U.S. goods set to rise in prices while recessionary risks are also marching upwards. What really worries me right now, though, is the action that we see across the Treasury complex, where there's been no let-up whatsoever in selling pressure at the long end of the curve, Pepperstone's senior research strategist Michael Brown said in a note. In Europe, the 10-year bond yield reversed from small increases earlier, last trading 2 basis points lower at 2.609%, while the 10-year gilt yield is up 6 basis points at 4.661%. The sell-off comes as the Federal Reserve is set to publish minutes of its March meeting Wednesday, while the Treasury is scheduled to auction $39 billion in 10-year notes later in the day.